Hello and welcome to our discussion on cash from operations. In this session, we'll focus our attention on the collection from the debtors, and we'll try to understand the effect on the collection from debtors on cash flow from operation by using direct and indirect method. Collection from operation can be calculated by actually understanding the relationship between the opening debtors and the closing debtors. Opening debtors add credit sales, less collections, less bad debts, less discount will give you the closing debtors. So therefore collection is equal to opening debtors plus credit sales minus the bad debts minus the discount and minus the closing debtors. Let us take a small example for that. The financial information given is opening debtors, closing debtors, bad debts, discount, stock purchase for cash, sold entire stock. It's not given for cash or credit. We can make any assumption, and expenses paid. So first let us find the profit, though you are required to, the focus of the question is to find the collection and cash from operations. Profit for the period is the sales, which is given, sales is equal to 80,000 less the COGS, the entire purchases sold, so the entire COGS becomes the entire purchases becomes the cost of the goods. Then expenses for the period 12,500. Bad debts that is 2,500. Discount to the customers, so discount to the customers is an expense or a loss. So the total expenses is 45,300. So the profit for the period is the sales minus expenses. So 19,000, let us see, COGS, expenses 12,500, bad debt 2,500, discount 300, expenses 12,500, cost of the goods sold. Okay. Now with this profit we can find CFO direct or indirect. Let us see CFO indirect method. Profit 19,500, and we know that profit is not same as CFO because of non-cash, because of non-operating, and because of the changes in working capital. Here it's only the change is on the stock, so therefore we can say that since this is opening debtors and closing debtor is given, so less increase in debtors, 8,000 minus 12, that means you have sold goods to that extent on credit, sold goods on credit. So cash from operation is 15,100. Let us understand that. So in order to find the CFO with a direct method, there is a need to find the collection, which is also the focus of our class of this session. So the opening debtors 8,000, sales, we have taken entire sales as a credit sale. We don't know the collection. The bad debt is given 2,500 and discounts are given 300, and the closing debtors is also given to 12,300. So the collection is equal to opening debtors plus sales minus bad debt minus discount minus the closing. So 72,900 72,900 is the collection for the period. So if the collection is 72,900 and the payments that you made during the period, operating payments, what are the operating payments? For the stock purchase, you paid 30,000, and expenses we paid 12,500. So therefore 72,000 minus 30,400. So we will try to understand. So profit is 30,400 by direct or indirect. The few things that we want to understand, that how and what is this 4,300 and how did that make up for the collection, which is 17. So 4,300 is actually the effect of collections minus the sales minus collection minus bad debt minus discount. So that means that during the period, though you are showing 80,000 as the sales, you are not collecting the entire 80,000. Your collection is only 72,900 and there is a bad debt. So the net effect of the change in the debtors explains, the net effect on the change in the debtor explains the transactions relating to the debtors, and transactions related to the debtors is sales, collections, bad debt and discount. So in an indirect method, when we are accounting for increase and decrease of the debtor, it automatically takes care of let me put that here so that we can see it better. It indirectly takes care of, so the opening debtors and the closing debtors difference is actually the net effect of the transactions during the period. So when we do an indirect method, we take the difference between the opening and closing debtors and make the adjustment, ignoring the bad debts, discount and collection and the sales, because the change in the opening debtors and the closing debtor automatically takes care of all the transactions done during the period. So in case of a direct method or indirect method, in case of direct method you take the collection and actual payment, whereas in indirect method you take the net effect of that which is coming from the balance sheet. Thank you very much.